Let's talk about some of the earnings itself. We do have with us Ajay Agarwal, who's the President, Finance and Strategy, Group CFO of Minda Corp. He joins in. It's a steady third quarter that the company reported, with the revenues were up 25%, EBITDA up 28%, and the net profit also on a year-on-year basis up around 32%. It's the commercial vehicles, which is an important segment for the company, which accounts for nearly a third of their revenues. So let's start with that itself. Do you think demand environment has improved out there? And going forward, if you could give us some sort of, outlook into what kind of growth parameters should we look at, especially in the commercial vehicle segment and the other growth segments of the company?
Thank you. Thank you for having us. From an overall perspective, the company has done quite well across the 9-month period and particularly in quarter 3. Speaking about the commercial vehicle segment, yes, we have deep focus on the segment across our business vertical, whether it is wiring harness, whether it is our die casting business, whether it is instrument cluster. All across our business verticals have delivered stupendous result and has given us significant growth in commercial vehicle. From a demand side, since the time the GST policy change was announced back in September, we see a significant spurt in growth, not only in the commercial vehicle segment across, whether it is passenger vehicle, whether it is a two-wheeler segment, three-wheeler segment, and in addition to that, commercial vehicle also saw a significant boost in demand. And when I look at the commentaries from all the major OEMs, they have been extremely positive. So all in all, good year we are witnessing, and hopefully the demand, we do not see any reason demand to go down for the next fiscal year as well.
All right. Hi, Mr. Agarwal. Good morning. Good to see you. And let me focus on a couple of aspects then. Exports is how much of your total mix right now?
We contribute about 8 to 10% of the overall export.
All right. And now we have a couple of trade agreements that have been signed, both with the United States as well as with the EU. Do you see that as a big tailwind for you? And where do you see exports as a percentage of your mix move up? I recall speaking to the management 2 or 3 years ago. And at that point of time as well, you had indicated that exports is a big runway out there. So give us details.
So as I said, from a organization point of view, export contributes anywhere between 8 to 10% of our top line. However, from a EBITDA margin perspective, it obviously contributes much better than overall EBITDA of around 11.8%. Speaking about, some of the trade agreements which India has signed, whether it is US, whether it is EU, whether it is UK, and in addition to the recent RBI policy which has been announced, all in all, we believe that Minda Corp has a lot to do with respect to these, trade agreements. From a long-term guidance perspective, given our top line contributes about 500 odd crore from exports, we believe that, export will contribute about 1,500 odd crore by the turn of calendar year 2030, which will contribute close to about, give or take, 12 to 13% of our top line.
All right, just one word. Since you said that margins are better in exports in comparison to the normal business, what is the margin difference? Roughly
about 100 bips.
All right. So what does that do to your overall performance? I ask you once again, because while demand has seen a spurt, CVs are doing well for you. You are fairly entrenched in that. Two-wheelers are doing well for you as well. You are entrenched in that as well. The one growth area for you has been passenger vehicles, or whether, your share was about 15%. You are targeting nearly a quarter of that coming in from there. How has that business performed, and what's the pace of growth that we foresee out here? Are they better margins, better realizations than the other verticals?
Yes, if you look at whether it is commercial vehicle, whether it is passenger vehicle, both of them have done relatively better than, two-wheeler and the three-wheeler segment. Now, from a long-term guidance perspective, we have said that, close to about 25% of our top line will be delivered by passenger vehicle. And it will see significant growth coming from wiring harness division, particularly, high voltage wiring harness business. Instrument cluster business, we are seeing the business is moving from analog cluster to TFT and TFT clusters. And, all these areas will contribute. And clearly, we have started new business lines. For example, a sunroof and tailgate. Those will also contribute to the growth of 25% contribution coming from four-wheeler segment.
So on a realization per vehicle sort of basis, what's the number that we should be tracking?
Close to about 1 lakh rupees per vehicle from
That's
a kit
for
value
a
standpoint.
passenger vehicle, right?
Yes, yes.
All right. And your kit value, sir, has moved up by how much? I'm looking at a couple of aspects. I think in two-wheelers, the kit value, I think, has doubled to around 35,000 rupees. Is that correct?
Yes, absolutely.
And there's further headway, particularly on
Yes,
this
we
portion
believe
of it?
we believe that yes, because of the recent announcement from the government side as well, we believe that we have a lot to achieve from a e-two-wheeler perspective as well.
So it moves up to around 50,000 rupees?
We are going to track at about 45 to 50,000 rupees. Yes.
Got it. Final question then. I believe your 2030 guidance is very, very ambitious. 17,500 crores of revenues, EBITDA of around 2,100 crores with ROC moving to around 25%. Confident you get there?
Well, some of them are saying that, why it is so low. It should have been much higher.
Do you think it can be better than that?
Yes, we believe, we are going to, work very hard to deliver our committed number of 17,500 crore, which, translates to close to about 22% CAGR from here on. Obviously, I must say that, this includes some of our M&A opportunities as well, close to about 4,500 crore. So all put together, we are extremely confident to deliver 17,500 crore.
Inorganic growth, that is to be announced or that has already been announced? What you currently have on the profile, or you're still on the prowl?
Well, one is already been undertaken. For example, we did, flash electronics. So, we will see how do we integrate that in our business. Alongside of that, we have kept a blue sky about 500-700 crore in terms of M&A opportunity.
So one more thing, just because you're giving us that hint, and we have to ask you this question. Flash, last quarter did close to around what? 500 crores in terms of revenue, 100 crores in terms of EBITDA. By the time we get to 2030, how much would Flash have scaled up to? And how much would you expect from the remainder M&A coming in?
See, the remainder, I'm thinking about anywhere between 500 to 700 crores. So that translates to about 3,800 to 4,000 crore coming from Flash. Right now, it is trailing at about 2,000 to 2,100 crore top line. Last quarter was an exceptional quarter for Flash. They delivered close to about 18% EBITDA. And from a 9-month period perspective, they have delivered about 17% EBITDA.
Got that. Take that point. Thank you so much for joining in. We will, stay committed to asking you questions every quarter and keeping a tab on where you are vis-a-vis your long-term guidance. Wish you good luck.